Hello, everyone, and thank you for taking the time to join Cobalt Blue Investor Webinar. Today, you've got me as your host. My name is Joel Crane. I'm the Investor Relations Manager. I'm joined today by Iola Hughes, who is the Head of Research for Row Motion, which is an industry consultant on all things EVs and batteries. The intention of today's webinar is to focus on some of the key industry issues facing the critical mineral sector. Now, specifically, that's really the global outlook for EV sales, as well as the outlook for battery chemistry makeup and the cathodes that go inside those EVs. So quickly, before I hand over to Iola, I'm just going to quickly summarize Cobalt Blue's current strategic priorities, and then give a quick update on the cobalt price itself and provide a little context ahead of our industry experts' presentation. So I'm sure most of you on this call are familiar, but just as a reminder, there are three pillars to Cobalt Blue's strategy: refinery, a mine in Broken Hill, and remining tailings and other mine waste with a global reach. So the near-term focus is really on the proposed cobalt nickel refinery, which will be located in the Kwinana industrial area of Western Australia. And this will be Australia's first cobalt refinery. We've given quite a few updates already this year, but it is progressing well. It's on track for a third quarter decision to proceed with construction, with an aim for a late 2025 startup. Just having a quick look at the cobalt price. That left-hand chart there shows where the price has been since 2015. We're clearly at a cyclical low now, and even when adjusted for inflation, probably at an all-time low at current prices. So not great times for the cobalt price, but like I said, it's a cyclical low, and we do expect a return to better pricing soon. So why is the cobalt price where it is? Well, I'll give you three reasons: supply, supply, and supply. Basically, there's way too much of it. What that right-hand chart is showing you, that supply growth has outpaced demand growth since 2022, and that's, of course, led by Chinese investment in the Democratic Republic of Congo. In particular, just as an example of how huge this growth has been, CMOC, which operates two large-scale mines in the DRC, has guided that for 2024, they'll produce between 60 and 70,000 tons of cobalt. Well, they just reported the first quarter output, and it's 25,000 tons. So already on pace already have hit so much of their guidance. What that's telling you is that cobalt market continues to be oversupplied. However, that's the bad news. And the good news is that this growth is finite, and we expect demand growth to begin sustainably outpacing supply growth as that pipeline of projects, particularly in the DRC, starts to slow really from this year. And finally, just some key facts on cobalt ahead of Iola's presentation. And just a reminder, those top two donut charts there are showing you that EVs, how important EVs are to the actual cobalt market itself. Just between 2018 and just a few years from now, the sheer dominance of EV or market, or where cobalt actually goes into, is significantly changed. So that's why it's important to keep abreast of the situation on global EV growth and battery chemistry, because of its such great importance. And that growth and importance has created such a huge lift in demand for physical cobalt itself between 2018 and the end of this decade, as gigafactories around the world continue to grow. So with that context in mind, I'm now going to hand over to Iola, who's going to give us her outlook on EVs. Over to you.
Thanks very much, Joel, and thanks for inviting me along today to kind of share our view on the market and how things are progressing so far. So yeah, firstly, I just want to give an update on the EV sales side of things. 2023, we saw just under 14 million units sold, with actually, a pretty impressive growth rate of 32% year on year. 2023 was a year kind of really fraught with a lot of negative sentiment around the EV sales side of things, and battery demand kind of declining, and yeah, lots of kind of concern in the market. But the data, doesn't necessarily reflect that same picture. A lot of those kind of headline news stories that we did see around people missing targets and production figures being cut are not necessarily reflective of the kind of overall EV market. And yeah, so 40 million units, was a relatively positive year, and strong growth. Looking at 2024 on a kind of global level, we're forecasting 17.6 million units, which is a 27% year-on-year increase, so slightly lower than 2023, but of course coming from a lower base. And then just to say as well, in the first quarter, sales were pretty good. We saw over 3 million units in Q1, which was a 21% year-on-year increase. That's a bit less than that 27% that we are expecting for the full year. But when we put it in the context of, how far through those, what percentage of that 17.6 have been achieved so far, we're at about 18%. And, you may expect it to be 25% given we are 1/4 of the way through the year. But when we compare to previous years, around 18%, 19% is pretty much on track for where we should be in respect to that target. So, things are looking like they should be proceeding relatively well in that respect. Thinking about kind of more regional view of those markets, is of course a story of kind of China in the driving seat and continuing to lead the way. So of that 17.6 million, we're forecasting over 10 million units to be sold in China. You have really continued kind of stable support there. The OEM, the commitments are strong, and ultimately you're getting to a point where that is becoming a much mature market. The kind of price competitiveness of EVs in China is really kind of a big factor there, and that's something that we don't see in the US market and the European market quite yet. So yeah, strongest growth rate expected to come through in the Chinese market. Thinking about the next two largest markets, so in the EU, certainly going to be a more difficult year for the EU. It's a transitionary year in terms of CO2 legislation with no real change coming through. Affordability of EVs is a major issue, and then we also have the issue of removal of some EV subsidies, such as in Germany, that we saw at the end of the year, which is set to have quite a poor impact, a big impact on the market there. And then in the US market, expecting relatively strong growth rate there from a lower base to 2.1 million units. There is a lot of negative sentiment, particularly in the US market, and in some cases, it does become kind of self-reciprocating and feeds itself. If the media is constantly saying there's problems with EVs, then that kind of carries down to the consumer. So an issue there. Lots of issues around production ramp-up headaches, such as GM bringing on 3 new vehicles. And then, of course, there's a bit of a kind of wait-and-see attitude at the moment in the US, given the election later this year, and potentially a kind of political downside there. So yeah, that's kind of our overview for 2024. Maybe just the one other to mention. The next biggest region, Asia Pacific Other, certainly one to watch and increasingly becoming a key market. Thailand in particular in 2023 saw really impressive growth. So that's really being driven by Chinese exports. So one to watch. So thinking about the kind of battery side of things. So in 2023, in terms of cathode demand, we saw LFP share fall just shy of 40%, with the rest being made up by mid nickel and high nickel chemistries. But when we break this out by region, what we can actually see is quite a big discrepancy between what's going on in China and what's going on in the rest of the world. So in the Chinese market, LFP share was over 60% in 2023. That's really being driven by the likes of BYD, who only sell LFP vehicles across all of their model range, and then various other OEMs who are pursuing that strategy. That remaining 40% that is being used is nickel-based cathodes, is not to be kind of overlooked. That demand is significant and is set to grow kind of in the coming years as well. Outside of the Chinese market, in 2023, LFP share was just around 13%. There are a number of kind of reasons for this, which you can probably get into in more detail in the Q&A. But you do really have ultimately a lack of LFP supply outside of China right now. And then even by 2030, we're forecasting LFP share to increase to just below 30%. So, there's still lots of room for other chemistries to come through as well. And then just thinking about that in kind of top level demand numbers. So inside of China, we're expecting LFP share to remain around 65% in the coming years, and then start to decline from 2030. That's not because we're expecting less people to want lower energy density batteries, but it's because you start to have other things come into the mix, such as sodium ion batteries or LMFP, which you can kind of group together in terms of the lower energy density. Outside of China, so by 2026, we're expecting LFP share to reach around 20% market share, which is around 0.3 terawatt hours. So still relatively small compared to nickel-based. And in terms of that kind of 1 terawatt hour mark, so the overall kind of battery market last year exceeded 1 terawatt hour for the first time. But thinking about it in terms of when will NCM reach 1 terawatt hour and when will LFP reach 1 terawatt hour. So we're forecasting NCM to reach 1 terawatt hour in 2027, and then LFP to reach that 3 years later, so not until 2030. And then, just the other thing to mention is we are starting to see more traditional NCM players enter the LFP space, as well as the kind of emergence of new manufacturers and kind of startups. And there's a whole list of them on the screen. That's a non-exhaustive list. There's many players in this space. However, uptake will be slow, and we do foresee that at least a lot of this initial capacity will be going towards the storage market rather than the EV space from these players. And then the final thing that we just wanted to kind of touch on was around the kind of exports and the growth of particularly BYD and other Chinese OEMs that are starting to look at selling EVs overseas. So what we've got here essentially is EV trade flows from 2023, with Europe, of course, being the kind of largest region here. So there were over 1 million vehicles exported last year, EVs exported last year, and 490,000 of those were going to the European market. When we kind of dial in and have a bit of a closer look around what those vehicles actually were, the majority of those are kind of Western brands. So, your likes of Dacia, Tesla, MG, Chinese manufactured or Chinese owned vehicles, but still with that kind of European nameplate, which is kind of a key thing in Europe. Having that kind of recognizable brand is very important. BYD, NIO, Great Wall, XPeng, they all kind of started to export vehicles into the European market last year, but the volumes right now are pretty low and also at quite a high price point. They're kind of stepping up activity this year. BYD have ordered several of their own Volvo ships, which will start to come through. But right now it is relatively early days for production, and there's a number of kind of issues that do need to be overcome, such as dealing with logistics, building up that brand. The other one just wanted to highlight, given the audience, is around the Australian market. So starting to see more and more vehicles kind of particularly go to Australia and New Zealand from the Chinese side. So of that 240,000 that went to Asia Pacific region, 14,000 went to New Zealand, and 72,000 went to Australia. BYD and Tesla having particular success here, which has got an interesting one because if we think about how those markets have typically been made up, it's been very much dominated by the Korean and Japanese manufacturers, who have perhaps been a bit slower on this electrification journey, and particularly exporting to those markets. So perhaps some concern for these players here, but right now it is being led by these Chinese manufacturers, who of course are bringing LFP into the mix. So thinking about we've got obviously the key regions of kind of Europe and North America, where LFP is potentially a bit slower to come through. Regions like Latin America and Asia Pacific, we are expecting LFP to come through a lot faster in that sense.
Okay, great, thanks. We'll go to some questions now, and I might just go back to your slide on EVs, Iowa. A lot of the questions we're getting today, and ones that we get quite a bit, is just around this decline or let me say, put it in sort of quotes, quote unquote, decline in EV sales or significant decline in battery demand. So it seems to me, based on both the numbers I'm seeing and what you said in your part of the presentation, that it's not so much demand is declining, or perhaps it's just a little bit of a disappointment from perhaps overestimated forecasts from last year. How do you respond to that?
Yeah, I think certainly that is probably the biggest problem. Ultimately it comes down to whose forecast you're looking at, and particularly, I think a good kind of example of it is when we're doing our forecast in house. There's kind of two ways that we will look at it. We'll look at it from kind of legislation angle, what subsidies are in place, what targets are in place, and that gives us kind of some insight of how the market can kind of grow based on that. We look at it from the kind of production capability angle and the OEM target level. So if you were to take kind of OEM's targets for EV sales, in 2025 and 2030, even near term, you end up with a number which is, far outstripping kind of both legislation and the production availabilities. So it's constantly something we're kind of doing is kind of taking a cut to these OEM targets and bringing them kind of in line with our expectations. So certainly that's something that we have to consider. Like over ambitious targets are being set across the board. So it's something that bringing those in line with reality is something that we kind of do often, and it is expected. I think a lot as well comes down to, if you were to take someone like GM, GM cut a lot of their production targets last year, but when you think about the kind of share that GM has within actual US EV sales, it's actually pretty minor. So they may have a very loud voice because of their impact in the ICE market, but within the EV market, maybe they should be taken with slightly less kind of relevance in a sense than say what Tesla's doing, which is a kind of another matter given their kind of Q1 results.
Yeah, so that was sort of my follow-on question, was that being an observer of the EV market and seeing particularly a lot of the US and European automakers cut some of those forecasts of their own. And perhaps that's what led to some of the negative sentiment around declines in EV sales and this sort of rhetoric, which we've now discussed is not really accurate. But maybe because we have seen some of these cuts in forecasts, maybe you can outline what are a few of the key issues behind those cuts in the US and Europe, and should we expect to see faster growth than we've seen over the past couple of years in those two very important regions?
Yeah, I mean, I would say we're kind of maybe taking the US market first. I think there's issues still around kind of model availability being kind of key thing. Like the US market has always lagged the Europe in terms of EV models available, and then lagged the Chinese market obviously much more in terms of the actual vehicles you can tap into. If you're to kind of take Tesla, and obviously Tesla is by and large has an outweighted position within the US market particularly. A lot of the issues there are potentially around a kind of rather stagnant model lineup. Ultimately you've got the best part of two vehicles which haven't, other than internal kind of updates, haven't changed significantly in recent years. So that's certainly playing on consumers' minds. You have kind of issues around the election later this year. I think there's very much a kind of wait and see attitude, because sentiment could change quite quickly, and you could see all sorts of changes. So there is generally an attitude of kind of waiting. And then you have issues as well of bringing on new vehicles. Production ramp up is difficult. GM's bringing on 3 new models this year, and we know that they're being constrained by things like their Ultium cells and Ultium platform. That gets translated to the vehicle side. So I'd say 2024, particularly in the US, we're expecting growth, but things aren't, it's no longer the case of every year this market is going to double. We've moved past that point, and the kind of wider interest rate environment does make things difficult as well. In the European market, the kind of biggest downside this year is probably Germany. So Germany kind of removed their BEV subsidy quite suddenly at the end of last year. So essentially there was a kind of a bit of a hole in their budget where previously some money had been reallocated from a COVID fund. So that sudden removal of the BEV subsidy, we're not expecting much growth in Germany this year, perhaps 1% year on year, or essentially flat. And because of Germany's kind of impact in terms of size of its market compared to the rest of Europe, that does obviously have an outweighed effect. Despite that, other European regions, we are expecting strong growth. So France, for example, is kind of progressing quite nicely. In Q1, they had about 20% year-on-year increase. They just increased their EV targets for 2027. So things are positive there. You also have other countries like Belgium, is doing very well in Q1. The UK introduced their new ZEV legislation this year, requiring a certain number. So there's a number of Europe you almost have to view as many different countries. It's no longer kind of operating as one kind of uniform body. I mean, not that it ever has really, but there's kind of each country is acting in quite a different way. And then the next kind of step change in the European market is 2025 in terms of CO2 legislation. So the previous step change came in 2021, and we did see a big uptick in sales there. This 2025 change is essentially kind of a 15% reduction in CO2 emissions. In terms of we did some analysis on it recently, and it generally looks that most OEMs are within reaching distance of achieving that, at least kind of with kind of continued sales a bit higher than where they are. So it's not going to be too difficult for these OEMs to meet it, particularly given the fact certain players can pull together. So if you think about kind of previously we've had pools with JLR, Honda, Tesla, they kind of share the credits between them. So that's kind of one to watch next year in terms of that new legislation. And then kind of beyond 2025 in the European market, you start having kind of a really kind of hard target to meet around 2030 when that really gets a lot harder. And you also will start to see kind of more models coming online. Affordability of vehicles in Europe is probably the key issue right now. I think Norway is maybe a good example of it. So Norway's always really kind of been the leader in the European market and the leader globally in terms of electrification. But what we saw at the start of last year, they got to around 80%, and since then have essentially kind of hovered around that point, with the kind of remaining 20%, which has always kind of been viewed as maybe these are people's second cars, like big cars. The reality of it and the vehicles that we continue to see being sold in the ICE segment are actually your kind of A and B class vehicles, so your much smaller cars, and that's where we see the biggest discrepancy between ICE and EV. And there are lots of consumers who want those small cars still. So that's definitely a big thing for Europe.
Okay, so I think we've sort of solved that issue that demand for EVs, particularly outside of China, remains quite strong, despite some sort of near-term headwinds. But I think looks like pretty soon those regions will be outpacing China in terms of growth. Moving on to the LFP versus NCM everlasting debate. As you've aptly pointed out, so far the LFP growth story has been largely concentrated in China. And I observe the commitments for Gigafactory in the US are almost exclusively NCM, or nickel cobalt dominated batteries. Why is it, and these are a lot of questions that we get, so I'm sort of lumping them together. Why has North America sort of gone down the nickel cobalt chemistry for cathodes as opposed to LFP? Because the investments they've made are clearly going to be a decade plus.
It ultimately comes down to kind of partnerships and who the OEMs are typically have been closer to. So In the US market, it's very much a story of relationships with Japanese and Korean manufacturers. These Japanese and Korean manufacturers don't have LFP cells right now, or LFP capacity. They have LFP cells in their pipeline and plans to bring them online. So, LG, for example, is planning to bring on 16 gigawatt hours of LFP capacity in the US market. This will be for storage though, rather than the EV space. So it really comes down to kind of that know-how and relationships. We are starting to see some OEMs look to Chinese cell manufacturers for LFP. So you've got the kind of CATL licensing agreements, which are being considered by both Ford and GM. I think the fact that both Ford and GM are pushing for that should make it somewhat easier for those licensing agreements to go through. But yeah, I mean, generally our kind of view is that it is going to be difficult to build LFP capacity outside of or in the US market. And maybe just kind of translating that to Europe as well. Even within the European market, in terms of big cell capacity that's been announced, there isn't any really for LFP. Even CATL with their plants in Germany and Hungary, their first phases are kind of all booked up with NCM capacity. There's potential that phase 2 would then be LFP, but at least kind of in the initial stages, we are expecting NCM to kind of continue to dominate in terms of production capacity. The other kind of key consideration, I think, as well, maybe more so for Europe than the US, is around end of life. Particularly when we spoke to kind of OEMs, maybe like 2-3 years ago, there was a lot of interest in LFP and a lot of excitement towards it. I think once the reality of the battery regulation came in and those kind of strict recycling requirements, the kind of prospects of LFP get a lot more difficult when you have to consider the end of life side of things as well.
That's right. Actually, that was going to be my next question. Just the first one was on North America, and then moving to Europe. The recyclability of LFP is quite difficult. So that, and you've already answered the question. I think it seems to have put constraints on growth in Europe. And the other thing I think people forget too is the P in LFP, phosphate, is also a commodity, and one that is very similar to most of the other commodities, dominated by Chinese supply chain, and the outlook for phosphate supply growth is actually quite constrained. So there's constraints to that commodity itself, much like you get in nickel and cobalt and manganese. Look, we're almost out of time here. I really appreciate you spending that time, particularly given you're calling from London, where it's quite early. Probably the most popular question we got, and one that hopefully will be a relatively short answer. And then I'll try to refrain from discussing myself, given my background. But what if there's a political transition in the US? What would that mean for the IRA and EV and battery demand?
Yeah, well, I think there's probably kind of a few different ways you can view it. So depending on the kind of outcome, so you can have a position where you have kind of a large Republican win. You can have a position where you have kind of just a Republican win, and then you can obviously have the Democrat win, staying where we are. So I think with the Democrat win, things kind of stay their course. With a just Republican win, so say Trump wins, but they don't win the House, for example, you would have things like the EPA standards would certainly get pulled back. That's something which we've seen time and time again when a new president comes through, is that they will rewrite those standards around how many EVs are going to need to be sold to meet the emission targets. So that's kind of an easy win. You then have as well, like, if you have a big Republican win, when you get to this point, there's a lot more potential of kind of repealing parts of the IRA and changing parts of the legislation. A full repeal, in our view, is very unlikely. Things that we will likely see go is around kind of the loans and grant schemes, where it'll be possible to kind of essentially just kind of turn off the tap when it comes to giving these out. And then there's also potential around, tightening things such as making the foreign entities of concern rule even tighter. So perhaps licensing agreements aren't allowed, which would then obviously have impact on those CATL deals.
Thanks. Yeah, we're going to wrap it up there. Thank you so much, Iola, for taking the time. I also want to take a moment to thank everyone on the call who's a shareholder, and thank you for sticking with us through what's been a relatively difficult time, particularly in the cobalt market. And we hope that opportunities like these, speaking with industry experts like Iola, can help sort of give a longer term perspective on how exciting the outlook for cobalt and really the rest of the critical minerals and EV space is, and why we're all here, and this is what we're doing. So again, thank you very much, everyone, for joining us. Thank you, Iola, and we'll see you next time.
Thank you.